So we have a whole full interesting week of notable earnings coming out with, of course, the most notable earnings that we're going to be wanting to watch being Skechers. Just kidding, it's going to be Tesla, as this is one of the Magnificent Seven stocks that are going to be reporting early in this upcoming week. Of course, we have Alphabet and a couple other great names, but a lot of market participants want to watch Tesla and hear what the forward guidance is and what the numbers look like. And so in this video, I just want to go ahead and cover Tesla stock from multiple different perspectives, and we'll start off with a technical approach. I know a lot of you guys like it when we start off with a technical approach. I see it in the retention of the videos. You guys watch more when we break down the charts. Now, something that's pretty interesting is we are currently at the same levels in terms of the price action for Tesla that we were back in late October of last year. So all this rallying, all these gains, all this stuff that we saw pretty much got erased fairly quickly, which is something that I said back at the peak. I said, look, this is not something that's going to sustain itself. This is a bunch of hoopla. And the reason I said this, right, is because, yeah, we saw Tesla stock rally off, Trump's election, right, the results, with the idea of, well, there's going to be a lot of deregulation. This is great. But fundamentally, nothing has changed. And so while this, was kind of promising for a lot of companies, particularly Tesla, nothing really changed. And oftentimes you see stocks eventually revert back to the fundamentals. And so when you just have a whole bunch of hoopla taking place, well, if there's nothing to change the fundamental idea or base of the company, well, it's going to revert back, right, to its actual fundamentals. Now, personally, I think Tesla stock can go a bit lower, but we'll go ahead and talk about it, right? Of course, there's a couple of things I want to talk about. Now, from, again, a technical perspective, which a lot of you guys, it looks like in the retention of the videos, you guys prefer when I break down the charts. We'll talk about other perspectives and, kind of my idea or approach to Tesla. But one thing that we see from a technical perspective is kind of this head and shoulders pattern, right, where we have the first shoulder, then the head, and then the second shoulder. And this is a reversal pattern that's pretty bearish when it's a top head and shoulders, because we have this line over here, which is a neckline. And if we have bad earnings and Tesla breaking down this neckline, a lot of technical analysts would look at this and say, okay, well, it's time to short Tesla, right, because this is a pattern that's very bearish. I'm not a big fan of patterns, right? I say that oftentimes in my videos. I look at the technicals, but it's not the largest data point that I rely on. I like to look at the fundamentals and other data points that I think are more important, like the macroeconomic environment. And even when I do technical analysis, I like to kind of watch things more from a quantitative approach versus with patterns. But nonetheless, it's something that a lot of market participants look at. And one thing that I do want to say is that Tesla's held more often times. I haven't checked it recently, right? I should probably do that. But Tesla is very heavily held by retail, and retail investors, they kind of don't look at the numbers, right? They kind of just like only trade based on patterns, which, all power, right? So it kind of ends up becoming a self-fulfilling prophecy when you have a bunch of retail holders that look at one data point and then it's showing, something that's negative in that data point. They'll kind of start shorting. So we'll want to watch to see if Tesla breaks below 210. If it does, well, that could be bad news, right? But also, from a more of a quantitative approach, this is the type of technical analysis I like, looking at, the moving averages. We have what we call a death cross, right? So when the 50, which by the way, the blue line is a 50-day exponential moving average, the green line is a 200-day exponential moving average. When it crosses over, that's viewed as very bullish, right? That's called the golden cross, right? It's where you get a lot of hallelujah music going on, and Tesla stocks, started rising up. Well, as Tesla stock started rising down, by the way, moving averages, they're lagging indicators, right? So that's something I want to point out. But we did see this crossover, right, with the 50-day moving average intersecting the 200-day moving average, and that's seen as a death cross. And a lot of investors, market participants will see this and kind of get a bit spooked out. We're also seeing this with the S&P 500. Again, not something you want to put too much weight on. It is something that's interesting, and this is more of the technical approach I like to use, but still, it doesn't mean much, simply because things can change, right? We could have news from the White House saying, look, all this fear with tariffs, look, we got it resolved, and then the market will go, to the moon, right? We could hear very positive news for Tesla or from Elon's mouth, and that could push the stock go up. But again, from a technical perspective, not good news. Now, something that I want to highlight from more of a alternative data point, we're seeing that month over month, the website visits for Tesla has been kind of falling down. We did have a little bit of a bump up in April, but we're actually seeing the website visits kind of, if we were to draw a trend line, it's actually going downwards. And the reason I say this is important to watch is because, of course, one thing that people will always say is, well, Justin, you're ignoring the robots or the robo-taxi, right? But a large portion of Tesla's business is actual vehicles, right? And so, and I have it highlighted over here. Sometimes I break it down from the actual financial statements, but here we have it very nicely depicted here, right? A large portion, 77% of Tesla's business comes from the sale and leasing of its vehicles, versus we have services and others, and then energy storage being a small portion. Each are kind of equally like a little under 12%, right? So a large portion of its business is from its vehicle sales, which is why we want to look at the website visits, because if people are not visiting the website, maybe they're not looking at purchasing vehicles. And if they're not looking at purchasing vehicles, well, that could be kind of an indicator that, hey, maybe things may not look good for this upcoming earnings, right? You want to look at everything to kind of come up with an idea of what may happen with earnings. But of course, you also want to listen to forward guidance. Earnings is very nuanced. It's not just the numbers. It's also, well, what are the projected numbers, right? But something else I want to highlight, and this is in regards to the consolidated statement of operations. I do want to applaud Tesla with its earnings in terms of its energy segments, right? Because what we see, right, this is 2022, 23, 24, and we look at energy and storage, it's increasing, right? Now, the cost of revenues, right, let's go to energy and services, it is increasing, but it's still profitable, right? It's still looking healthy. But the area that is not looking healthy is services and others, right? We see it increasing, right, 22, 23, 24. But we also see the cost of revenues increasing too much as well, which is actually killing the profit margins, right? We look at this figure over here, 9921. Then we also see 10,534, right? So kind of seeing profit margins get crushed here. And so that's something I'm going to be watching. But of course, I have to applaud that the energy business is looking healthy. But does it really matter when it's such a small portion? Of course, maybe we could take a gamble and say, well, in the future, this will make a large portion of Tesla's earnings in the future, and it won't have to rely on the autos. So that's kind of like the bullish outlook, right? That's the bullish thesis. Like, hey, don't watch this, watch this. But I am also watching this, okay? I want to look at everything, right? Currently, this is what we know. This makes a large portion of the revenues. So that's something that we're watching. Now, here's something that's pretty interesting that I want to share, right? This is kind of what we've seen so far for the first quarter of 2025. This is the data from FactSet, and it's a very interesting picture, right? Because on the left-hand side, we have positive earnings so far, and from the 5-year average, when there was positive beats in earnings, well, we saw stocks rise up about 1% on average, right? This is all aggregate data. Now, what we're seeing this year is that even though we're having positive beats so far, and now it's kind of early because we still have a lot of earnings to come out, but so far, stocks have been falling down, even though they're beating earnings. Now, why could that be? Well, that could be, the forward guidance is probably weak, right? Everyone's like, hey, we beat earnings, but next quarter, I don't know about that with them tariffs and, all the macroeconomic uncertainty, right? So that's kind of why we're seeing, even with beats, we're seeing a lot of stocks so far that reported earnings in the S&P 500 kind of fall down. So just something that I wanted to point out. Now, on the negative side, it's also pretty interesting, right? Because when on the 5-year average, like historically, when stocks lose, right, they don't beat earnings, they fall down 2.3%. Now, so far, what we've seen is for Q1 of 2025, it's only fallen down 1.6%. So they're not getting as, punished as they were before. Stocks are not getting beaten down when they're beating earnings like they once were. And the only idea that I could think of that kind of suits both of the numbers that we're seeing is that maybe the expectation wasn't even there, right? Of course, if something loses earnings and you had expectations that it was going to beat it, you're more disappointed than if you already had expectations like, yeah, I already knew this earnings report was going to be a piece of crap, right? Sorry for using those words, but that's the only way I could kind of envision why we're seeing this. But again, it's kind of early. We still have a lot of earnings to come out, and this chart is going to be updated, right? So that's why next week is a very interesting week, right? We got Skechers. Just kidding. No one cares. Actually, no. You got to pay attention to all the companies that people are not paying attention to. That's oftentimes where you find great results in the market, right? But nonetheless, here's just something I found funny. I don't know if people know this. There's this guy, I think it's pronounced Curious Peggy, right? He's very, first of all, he's on YouTube. He's also on X. Very bullish on Tesla, right? He's kind of one of those guys where if Elon Musk blows a fart, he's like, look, Tesla stock is going to go to the moon because of what Elon just did, right? And by the way, I like some of his content. This is not a diss, but someone responded, right? He wrote, something big is brewing at Tesla, and someone responded bankruptcy. And I don't know. I just thought that was funny. I don't agree. I don't think bankruptcy is going to take place. Tesla actually is kind of healthy. They're not going to have bankruptcy anytime soon. But just thought it was funny that, someone responded to this because, Curious Peggy is a bit more. He has this biased behavior where everything is positive, everything is big and good news for Tesla, and he could turn the most negative data point and say, well, you're not looking 100 years in the future, right? And it's like, okay. So just thought that was interesting. By the way, if you guys haven't done so already, make sure to hit that like button. It really does help out with the channel. It does help out push the videos, and I appreciate it. But on to the next. Something that we're also seeing from just like a macro standpoint, we're seeing consumer sentiment kind of dwindle. It's falling off like a rock. And that's a bit concerning, right? We also have seen delinquencies for subprime auto loans kind of increase. So that's not good, right? Consumer sentiment is going down. Inflation is likely to spike up. A lot of uncertainty. So those are things that kind of make me believe that the forward guidance that we're going to hear from Tesla is not going to look so good. But we all know that Elon Musk, he has one superpower, and maybe he has multiple, but one superpower I know he has for sure is his ability to spin something negative in earnings to something positive that everyone walks out and says, wow, I'm optimistic. Now, he's been doing that for almost a decade, especially with FSD, saying, hey, we're a few months away, right? He has the power of, swaying people to an optimistic perspective. So even though overall the consumer sentiment has been dropping, delinquencies are increasing, uncertainty is increasing, things are looking bad, we could possibly hear Elon say something really positive and kind of push Tesla stock upwards. The only time Elon Musk had an earnings call that was like unusual or he was a bit pessimistic was back in 2020. I believe it's 2023 if I'm not mistaken. But here is one thing I want to end off with. Just some notes. These are questions that I kind of wish, I hope the analysts ask. I feel like they always give softball questions. I want someone to ask just these 3 questions on my end, right? Maybe you guys could comment down what questions you want answered in the earnings report, right? Or not the earnings report, but the forward guidance, right? Or the earnings call is what I'm trying to say, right? What are the updates on humanoids? Right? When are we going to have the humanoids working on the factories? So many people are like, Justin, you're not factoring in the humanoids. I want to know how many humanoids are being built or how much we expect to be built in the next few quarters because we haven't heard much about this, and I want to hear about that. Also, what are the legal or legislative hurdles necessary to expand unsupervised autonomy ride-hailing nationally this year, right? So what are the hurdles? Because we saw Tesla stock rocket to the moon based on the idea that there's deregulation. Well, what are the current things that are stifling Tesla stock right now, right? What is stifling Tesla stock from having autonomy solved, right? I want to hear that because before it was always legal hurdles. Well, now we know deregulation is likely happening. Well, what is the next step and what is holding it back? Also, lastly, what is the metric that the company uses to track satisfaction? Why do I want this answered? I want to know what they're looking at and also how Tesla's brand equity has changed over the past year. I've made several videos about the sentiment for Tesla dwindling down. We see people doing horrible acts, right? They're blowing up Teslas. They're, vandalizing dealerships. Those people are getting prosecuted, and it's so bad to see, right? Because some of these people, they're like 18 years old. They're throwing their lives away for some political views, which, again, I'm all power, right? I try to have a moderate approach, right? I don't lean all the way to the right. I don't lean really to the left, right? But I want to know what they're using to track sentiment. Like, are people more likely to buy Teslas that they buy Tesla? What is the metric that they watch? and also what their perspective is on the brand's equity. So those are things I want answered. Probably won't be answered. I really hope the humanoids. That was something I was really excited for, the humanoids. But you guys let me know in the comment section down below, what are your thoughts on Tesla's earnings? And with that said, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.